Hello, welcome everybody to Trade School. Today is the 2nd of September in 2022, although chances are you're probably going to be watching this on some form of replay later on. Today's topic is called Your 7 Steps to Better Trading Results. And what I've found over the years is that it comes down to about the same 7 things over and over and over again that really cause problems when it comes to trading and becoming profitable. All right, so with that, let's get going here. I'm going to hide myself down in the lower left-hand corner to make sure that we don't cover up any material. So if you don't know who I am, again, my name is Doc Severson, and current service that we're working at here is 12minutetrading.com. I've been part of several services in the past 15 to 20 years, such as Options MD, Theo Trade, Doc's Trading Tools, Options Linebacker, Ready Set Trade, and ReadySetCrypto.com. So here we are at 12-minute trading, and through that time, I have become, my specialty really is fractal price analysis, options and future strategies, as well as understanding the trading mindset, understanding what it takes to become a profitable trader. And through the years, what I've done is I've written a couple of books. First one is Hacking the Holy Grail. And this is about understanding what's necessary to What is the Holy Grail? Everybody's looking for the Holy Grail of trading, which is to find that one strategy that wins every time and doesn't risk anything. But actually, what we find is that it's between your ears. And then a couple of years ago, I wrote Fractal Energy Trading. So this is a unique application of how we look at markets from a price action perspective, also a trend and energy perspective as well, too. So it's very different, very unique way to look at the markets, and it's one thing that you can use for any market and any time frame. So with that said, let's get going here. My purpose today, I've been trading the live markets every day since 2004. I've made every mistake that you possibly can make doing that, right? So much of what I'm sharing today was learned by necessity at great personal cost. I've lost a lot of sleep as to like, what is this? Why can't I do things right? And I had to understand the lessons that I'm teaching you today. So I went through the same journey everybody else does. You know, I didn't start on the floor of the CBOE or the New York Stock Exchange. I wasn't a runner, running orders down there from institutions. I was a retail trader from day one. And it wasn't until a few years into my own trading career that I realized I was not trading against the market. I was actually trading against myself. I was the biggest impediment to my own success. So my purpose today is to help you understand why you have been your own worst enemy when it comes to your own trading performance and what you can do to start today to fix it. And that's through the 7 steps. Okay, ready? Let's get going. Now, being a former engineer, once upon a time, I always start out things with a problem statement, right? It's a problem that we need to fix. And the problems that we're all trying to solve is to improve our financial performance. I'm going to go ahead and park myself down here in the lower left-hand corner as long as I don't get in the way of anything. I want you to realize I'm still here. I'm still down here. Okay, we're trying to improve our financial performance. The challenges that you encounter depend on where you are in this progression to mastery. And I ran into this gentleman named Bo Yoder. This must have been, I'd say, 2004, 2005. And with his permission, I'm sharing what he calls his progression. So everybody starts in the same place and they attain whatever level that they're going to attain in the progression. I want you to see where you think that you fit in as you listen to this. So we all start with what's called mystification. We all stumble into the market, and it's usually because the market's ripping to the upside, and we want a piece of that too. So you're brand new, you don't know how much about markets work, and you view trading as fun and exciting. More than likely, you joined in during the end of a bull market, so you're unconsciously incompetent. Success comes easily, right? So it's just like jumping in a river and floating downstream. And making money seems simple. You're sizing a Lambo for your garage. Is it wide enough? Is it deep enough? You go all in with everything you have and you get crushed when the markets turn. This is the mystification stage. And chances are probably if you're listening to me today, you're well beyond this stage. But this is where everybody starts. And then we get to what's called the hot pot stage. You got crushed, but you're hooked. You start to define your approach and learn how markets move. You wait for your setup. But like touching a hot pot on the stove, you get burned every time you enter and you start getting timid. So you decide that the problem is the strategy and not you. So you keep trying different strategies with the same result. And this is where I see folks do this. And not that I didn't do this too, right? But you'll learn about some kind of a strategy and you'll spend some time and invest money and effort into it. And you'll take a couple of trades in and out. You'll take a couple of trades and chances are they don't work out. And so instead of accepting responsibility for that, we get discouraged. And our first instinct is to run over here to this bright, shiny penny and somebody else talking about this really super simple strategy. And so we go thundering over here and we invest time and energy and money into this. And then we learn how to trade the strategy and we take a couple of trades and guess what? They don't work either. And so We go through the same thing, right? We go through the same, like running from one thing to another, to another, to another, trying different things. And what we end up doing is instead of getting 10 years of experience, we get 1 year of experience 10 times if you've been at this for 10 years. Most people, if they're at this for 10 years and they're not any good, will finally stop doing it, or will have a spouse saying, that's enough. So this is the hot pot stage. We know we want to do this, but every time that we enter, we get smacked. We get our hands burned. Then we get to what's called the cynical skepticism stage. Every time you enter a trade, you lose. And you joke with your friends that you should take the other side of your trades. We've all made that joke. Boy, I'm terrible. You should take the other side of my trade. You're convinced that it's somebody else's fault. The Fed, the market makers, the brokers, the gurus, high-frequency trading, whatever. There's always some bogeyman out there to blame things on. Some never exit this stage and they quit. The reason why people get into this stage and they get stuck in this stage is because they're trading not to lose. Have you ever watched a game when you saw a team go way up? And maybe this is the Atlanta Falcons versus the New England Patriots a few years back, when they were way up in the Super Bowl at halftime. I think it was like 31-3. It was like, the game's over. But then you saw the game shift because Atlanta started playing not to lose. And it completely shifted because New England never stopped playing to win. And they eventually did win that game. If you trade not to lose, you will lose. You have to trade to win. Now, you can't just trade to win without any skills. It takes edge, as we'll get into as well, too. But this is the cynical skepticism stage. You think that everybody's going against you. You think the world's against you. The markets are against you. Every time you zig, the market zags. And you think it's a scam. It's just a big casino, right? You blame it on everything else but yourself. So if you get out of this stage, you get into what's called the Squiggle trader stage. And you can identify folks in this stage because their charts look like this. They look like spaghetti. There's 1 million studies on there, and they're asking for more. Hey, you got any other new studies I can add on my chart? Meanwhile, what you've done is you've obscured the one thing that really counts, which is the price. Okay? This is scared money when you have something like this. Again, you're trading not to lose. You're not trading to win, you're trading not to lose. And this is where I find the majority of traders stuck in this stage because they keep trying stuff. They keep trying to, it's like you keep slapping paint on something, hoping that it looks differently eventually, right? So the Squiggle trader stage, and it's pretty easy to recognize as to whether you're in this stage or not because you're always looking for that one missing piece to your strategy. What you find is professionals actually have rather simple, very crude systems that don't have a whole lot of moving parts. In fact, the more moving parts, the less likely they are to be professionals. So there's the Squiggle trader stage, and this is where I see the majority. It's almost like a bell curve, right? There's almost like a bell curve where so many people get stuck in this area right there, and they just can't get to the next level. And the next level is called inwardly bound. Traders that survive all the previous stages without running out of money, without losing support from your spouse, without just getting bored and just giving up and quitting and telling the world about it on social media, they have a chance to become consistently profitable if they manage to graduate to this stage. Those in this stage finally understand that the holy grail of trading is not some study, it's not some chart pattern, it's not some strategy, it's not some different type of trading instrument. It's their ability to understand that trading edge starts with them and their ability to think differently from the rest of the investing herd. It really is. So this is where you become inwardly bound. All of a sudden you take responsibility. Hey, it's really me versus me. It's not me versus the market. You are your biggest enemy when it comes to the market. That's the inwardly bound stage. And if you're able to get to this point where you start to do self-study, like how do I make decisions when everything hits the fan? Do I do the right thing? Can I understand how I think? Can I understand how not to make these decisions? Am I starting to journal how I make decisions? Those kind of things. This is part of the inwardly bound stage. And then ultimately we get to mastery. Mastery, if you have to ask somebody if they're a master, they probably will not say that they are a master, right? Because they'll be humble enough to say, well, no, I'm never mastering the market. The market is always changing, right? But you can kind of tell trading is very easy at this level as the trades literally come to them. They just sit there and wait. They're patient enough. They don't have to just throw a whole bunch of stuff at the wall. They're waiting for the trade to come to them. If it comes to them, they fire. If it doesn't, they wait until the next setup. It's quite simple. It's easy to say. It's really tough to do because it requires that feedback loop. It requires some positive reinforcement to say that waiting for a trade and not just machine gunning trades out there and hoping for a better result ultimately works with this. So we're going to talk about what is required to get to mastery, and I think that you'll see these steps as we go through the 7 steps. If you're able to internalize these 7 steps, I think you'll see that path towards mastery. Now, a lot of people say, hey, that's not for me. Or I can't tell you how many people come up to me and say, oh, I'm definitely inwardly bound. I'm well on my way to mastery. Okay? If you were truly inwardly bound and well on your way to mastery, you'd probably have a little bit more humility, right? Most people I find are still in Squiggle trader stage, right? Most people that are truly in mastery will not even admit it and will be humble enough to say no. So a lot of people want to skip stages. They say, well, that one doesn't sound any fun, so I think I'll go from hot pot all the way into inwardly bound. Oops, wrong way. Okay, so if you want to skip stages, I've never seen anybody skip a stage due to the way our brains process information, the way that we look at risk. However, I've seen some exceptionally committed traders minimize their time in the earlier stages. So they kind of tend to blast right through them. The sooner that you can get into inwardly bound, the sooner that you'll be able to earn your fair share and stop funding somebody else's account. So here we go. We're going to get into the 7 steps. And I will take, if there's any questions, please write them down. And I'll take those questions at the end of today's session for those of you that are with us live here today. And oh, by the way, if you're watching this on a replay, if you want to ask a question, probably the best place to ask it is not in the YouTube chat because I may or may not see it later on. And I don't want you to feel that we don't care. I'm not notified when somebody chaps in. So I would send me a message, doc@12minutetrading.com, if you have any questions on any of the material today. But if you're live, hang on a half an hour and we'll be wrapping this up, and then we'll send you on your way into the weekend. Okay, that's the problem that we're trying to solve. So let's get to step 1. I wonder if any of you have seen this movie, which is, the name escapes me right now, but it came out 2 or 3 years ago, and it features this climber by the name of Alex Honnold, who is the only person in the world to have free climbed El Capitan in Yosemite. Hello, everybody. We got some live folks checking in. Awesome. And it was one of the most awesome movies I've ever seen. To me, it really represents risk, right? I know how the movie ends up, right? I know that he lived through the experience. And I'm sitting there watching the movie in a theater, and I'm curled up into the fetal position. I'm like so stressed out watching this because at any moment, this guy could just plummet, 2,000 feet to his death. And he's holding on by his fingertips. He's doing free climbing. This is the most incredible thing I've ever seen. Oh, it's called Free Solo. Free Solo. It is called Free Solo. So it's available on just about any streaming platform. If you're not doing anything tonight, please watch it. It is the most incredible movie that you will see. And he's quite an endearing individual as well too. He's very, very humble. He's he's just earned the right to do it. And you'll learn things from that movie that apply to trading, believe it or not. I don't want to go too far down this rat hole, but the way that he applies himself to climbing a wall is the way that all of us should apply towards trading. So step one, we have to think differently about risk. What's the first thing that comes to your mind when they say the word risk? Most people will say risk is bad, right? Chances are good that starting when you were very young, everyone around you was doing everything that they could to remove risk from your life. Wrapping you in shrink wrap and bubble wrap and stuff. Your activities, the kids that you hung around with, the college that you went to, the major that you chose, your potential spouse, everyone in your potential or personal circle as well as society in general has been trained to remove risk from your life. Everywhere we go, risk is a bad thing. So we come to trading with the same attitude. I mean, we get this ingrained with, 30 or 40 years of risk is bad, risk is bad, risk is bad, avoid risk. And we should do everything to avoid it. Okay, so you come to trading with that same attitude because it works for your career. So think of the last time, and I just gave this example with the Patriots and the Falcons, but when a team goes into play prevent defense, how many times did they end up losing the game because they shifted into trading not to lose? So new retail traders don't trade to win, they trade not to lose because they don't know how to win yet. So the problem is fear rules our decisions. You've heard about fear and greed ruling the market. To me, it's all fear. Everything is fear. Fear of missing out, fear of loss, it's all fear. If we focus on not losing, what do we get? We fear that rallies will leave without us, fear of missing out. We fear that sell-offs will destroy our account, fear of loss. Fear rules every retail investing decision. Greed rarely comes without a lot of experience and hubris, and we're not there yet. So it's fear. Fear rules retail trading. And because of this, we eat like a bird and crap like an elephant when it comes to our trading. We're trading with scared capital, so we take small profits off the table before they can reverse. Oh, I'm going to take this off before it can go against me. But we'll ride losing trades down the rabbit hole for many different irrational reasons. I know it's just going to reverse. Or, so-and-so said it was going to bounce. It's just a paper loss now. It's not an actual loss until I close the trade. Right? How often have we heard that one? So we eat like a bird, crap like an elephant. This is the MO of most traders. So you have to understand that there is no such thing as reward without risk. I get questions all the time. Hey doc, what's the best strategy for me to start trading with? I don't want to take a whole lot of risk, but I want to make sure I get my fair share of winning. And I got a small account, I got $1,000, and I can't afford to risk that. So I need to make sure whatever I choose is going to work out really, really well for me. And you know what my response to them is? Dude, certificate of deposit. That's the only thing that you can do with no risk to it, basically, right? Or treasury bills, things like that. Try passbook savings. More risk should lead to more reward if you can manage it. Think of the market as this unlimited river of risk going by you. And all you're going to do is you're going to dip out a thimbleful from time to time. You're going to take out some of that risk. You're going to get paid for it, but you got to manage that risk and make sure it doesn't run away from you. And don't take a 5-gallon bucket and say, all right, we're going all in. This is YOLO, right? A professional looks at risk as a tool. No risk it, no biscuit. If there's no risk behind the trade, there's no gain. There's no potential reward. So risk is a tool, not something to run from. And that's easy for me to say. It's very difficult for most people to start, just flip a switch and start thinking in that manner. You have to earn the right to do that. And we'll talk about that in a minute with some ways to do that. So a lot of times retail traders will take trades that feel good. Everything lines up just perfectly. I got everything lined up here. And for some reason, those trades do not work out. I don't know why that is. But the trades that are really comfortable, what you find is the trades that feel good are the ones where you're going with the majority of the crowd. It feels good because you're getting verification. You're getting the trade verified by, somebody on CNBC is saying, oh, yeah, definitely we're going higher from here. Or it could be some kind of subreddit, it could be Twitter, it could be anybody. It could be just, a massive amount of confirmation that's out there saying, yep, you're doing the right thing, buddy. And so you take trades that feel good, and for whatever reason, they are not going to work out. And you'll find that going with the herd is actually one of the worst things that you can possibly do. So this almost always means that you're going with the crowd instead of thinking independently if it feels good. So you have to think differently. We have to think differently about risk. We need to think about risk being our friend, not a foe. It's just a tool, something that we need to manage and not something to avoid. We'll learn that taking the trades that feel bad means that we're trading against the crowd. So if you're taking a trade and you almost need to grab an air sickness bag, as soon as you hit execute on it, you're probably doing the right thing. It's probably going to be a trade that works out for you. And that's hard to think of, right? So you have to go through repetition to understand and retrain your brain that bad equals good. Step 2, we need to specialize and focus. All of the messages out there, well, you can't put all your eggs in one basket. You need to diversify. A well-diversified portfolio of stocks and bonds. We've all heard that for, decades, right? All that crap from, well, if E.F. Hutton says something, then we need to listen. So all this does is make you a jack of all trades and a master of none. You're just this massive bag holder out there. You have a whole bunch of stuff in your portfolio. You have no idea why. So here's your competition. They will typically specialize in one form of trading, one instrument, one time frame, perhaps one time of day. They're patiently waiting for the herd to make a mistake and overcommit to an obvious move. I've been on the S&P 500 pit in the CBOE before, and it's not as big as you think it should be. And this was some years ago. This is back in 2007. And it was a little stadium-style pit. Don't even know if it's there today. Maybe all electronic now. But guys would stand there literally all day for 6.5 hours. And they owned that 1 square foot of real estate. And they would not move from there. They would stay there all day. They would have lunch brought to them. And they would specialize in one strike price, one option. And they'd sit there and hammer on it all day long. That's our competition. They're waiting for us to make a mistake. And what about you? You're not focused. You've got dozens of things going on at the same time. You're trading several different strategies using different instruments on different assets and different time frames. You got 10 studies on your chart and wondering if you should add more. You're hoping that the winners compensate for the losers. And you're doing this during work hours as a job. And you wonder why your competition is winning. You're not focused. So what you got to do is you got to find your one thing. I want you to do yourself a favor. Now, this is an old movie. This is about 30 years ago. It's a movie called City Slickers with Billy Crystal and actually Jack Palance in here, as well as a couple other famous, Bruno Kirby and Daniel Stern and some other guys that you may recognize. You got to find your one thing. And this is what you'll specialize in. Nobody else can find this for you. A lot of people say, Doc, what's my one thing? What should it be? I don't know. I don't know you. I don't know what fires you up. What gives you the rage to master? What gives you the rage to master? So find me one other profession where a rank amateur can compete against a seasoned professional. Like if you felt like you could hit 100-mile-an-hour baseball, you can't just, drive to Yankee Stadium tonight and say, I'd like to hit tonight if it's all right. So you're up against the best in the world. And is it any wonder why we get our clock cleaned with it? So what I want you to find is search Curly's Law in YouTube from the scene from City Slickers. It's maybe about a 2-minute video that's out there. And it's all about you finding the one thing. And I can't do the scene justice. You've got to watch it for yourself. If you've never seen it before, wait until after we finish today and then go watch this little scene, because I think it'll be worth your time. And it may affect how you think of things from here on in. Okay, so step 2, specialize and focus. Step 3, define your edge. Define your edge. What is your edge against the rest of the market if you're choosing to compete against? There's no trophies awarded based on how long you've been at this. Do you have 10 years of market experience or 1 year of market experience 10 times? It's common for people that are just starting out to just bounce from one thing to one thing until you find out what you're meant to do. That's okay. It's kind of like speed dating, right? You know what speed dating is, right? So edge is not automatically awarded by length of service. So you might be knowledgeable about a lot of different things, but if you don't know what your edge is, again, you're going to get taken advantage of. So there's no trophies out there. Winners and losers. Don't think of it as personal combat, that if you win, that you're taking something away from somebody else. Some people get all worked up about that. Like, oh no, this is a bad thing. This is really horrible. How can I do that? Think of markets as a massive river of opportunity flowing by. You just want your fair share, right? There's plenty enough for everybody. Have an abundance mentality. There's plenty for everybody out there. Some are going to earn more. You might as well earn your fair share if you're going to put your time into this. So what's your edge? You got to have an edge versus the crowd. What is your competitive edge? When the crowd goes one way, what is your edge to either move with or against the crowd? Trend trading and time decay are 2 standard edges, like jump on a trend and ride it for a while. That's an edge. Time decay with options, that's definitely an edge. But being on the other side of a panicked herd is surely the strongest edge of all. And I will say chart studies are not enough. There's a lot of people that says, oh, if you want some edge, you need this new study. So a mistaken perception is that typical chart studies like stochastics, MACD, moving averages give you edge. Nope, they don't give you any edge at all. They're just lagging indicators of price behavior that showed you what happened over the last 14 days. Doesn't show anything at all. Doesn't show any kind of an edge. It just gives you a way to read what's happening or what has happened in the past. And TA is not about predicting the future, believe it or not. It's for making decisions going forward on the hard right edge. So systems, if you have a system, you have a possible edge. If you have a combination of method or the signals necessary to show entry and exit, plus the correct mindset to take the trades that feel bad, plus the right money management, which includes managing your risk appropriately, you just might give you an edge against the rest of the market if you specialize in it. Not if you're just playing around, but if you specialize in it. So the very best edge of all is being on the other side of the trade from the investing herd. Like today would be, today we've had a nasty reversal in the price since we went higher after the jobs report. We've dropped somewhere around 100 points off of the highs of the day, which is crazy, right? But everybody got a nice jobs report. They were all looking to the long side, and then the best edge of all is being on the opposite side of the herd. This is the most difficult place to be, and it may take you years to learn how to do this. You have to learn to think independently. And in today's world of social media, where we implicitly trust people's Amazon reviews, hey, what store should I buy? What katana sword should I buy? Based on the number of stars that people that we've never even met before have given it. We don't know. But that's the way life is today. We implicitly trust. We have socialized that process of decision. And we should avoid doing this when it comes to trading because it will lead to ruin. Check out any Wall Street Bets thread these days over the last 6 months, and you'll see the same thing. Okay, so you got to define your edge. What's your edge against the rest of the market? That gets us to step 4. If you want to make a business of your trading, you better start planning, and that includes a business plan. I know a lot of people are like, oh, I don't want to do a business plan. Come on. Your competition has a fully vetted business plan. They probably have a legal team and they measure performance every single day against targets. What's your plan? Well, I plan to make money. Well, thanks for playing. Next, you may continue the process of funding others' accounts. You've got to have a business plan. Otherwise, you're not trading it like a business. You're trading it like a very expensive hobby. A trading plan. Your competition also runs by a trading plan. If the trader cannot follow the plan, they'll be fired and the firm will find someone else. They realize the only way that they can maintain their defined trading edge is to follow a plan. What is your trading plan? You should have one for your one thing strategy. This will help. So step 4 is fairly simple. You need a business plan and a trading plan. And that trading plan needs to be for every strategy that you trade, which should ideally be just one right now while you're learning to be profitable. Step 5, iterate and improve. Nobody gets it right the first time, and it's your ability to adapt, learn, and improve that separates the amateur from the pro. The amateur just keeps trying the same thing again and again and expects different results. The pro will look for the standard improvement cycle. They'll start up with some kind of goals, right? Start out with some kind of goals and then realize those goals into the market through a set of rules. So this is the strategy. This is the tactics. All right, let's go try it. Let's see how it works in the live market. We get some kind of results and then we're going to analyze them versus our goals. How did the goals compare to the actual results that we had? Or how did the results compare to the goals that we had originally? And based on that, we're going to grab the steering wheel and make a correction, left or right, up or down, back and forth. Need to make corrections. Okay, it's not working where we want to, so this is what I'm going to do to make sure that this doesn't happen again. Go back to the goals. Are they realistic? Can we still attain them, or do we need to edit them? All right, do we need new rules? Do we need to identify or modify those rules? Okay, let's try this new amended plan. And what we end up doing is, if you do this right, it's almost like circling higher and higher and higher. You improve your performance iteratively. So think about this in sports. Why do athletes drill over and over? Tiger Woods is the guy, when he was at his prime, he would get off the course and he'd go right to the range and work on one single thing. Or Michael Jordan would sit there and do foul shots or three-point jumpers, before and after practice, when everybody else was going home in their Lamborghinis. In trading, what you have to do is find your iteration. You should learn from every trade, especially the losing ones. What was the root cause behind the loss? What can you eliminate or do differently next time? And this is why you see me with all these, crazy spreadsheets. So you've got to keep score. Understand your performance numbers. So if somebody says, hey, what's that baseball player's batting average? You should have your own batting average and OBS, right? All that stuff. Understand your performance numbers. Commit to improvement. There's a reason why every baseball player knows his average against every type of pitch and every location of the strike zone. And the pitchers do the same thing on the opposite side. So be a pro, keep score if you know if and how you're improving. So you know if and how you're improving. So iterate and improve. And this is really one of the keys. This is one of the keys, and it will make a huge difference in terms of how you think about what you're doing. Step 6, build a trader's mindset. Perhaps the most important trading tool is your mind. Neuroscience and especially NLP, or neuro-linguistic programming, are new fields that have seen tremendous leaps in progress lately. If you have results that don't make sense to you, this is because you're neglecting how your brain actually works, trying to force fit things into there. What you focus on expands. The subconscious mind has no form or filter. If you say to yourself, all right, that's it, no more losing trades, all it hears is losing trades. That's precisely what you'll get. It's just like people saying, all right, that's it, no more debt. And they proceed to pile on more debt. If you focus on the negative, you'll get more of the same negative results. So stop pushing that piece of string on the table. Learn to pull it in the direction that you want. say, all right, today we're going to have all winning trades or something to that effect, right? Focus on the positive. What you also focus is you focus on what you fear, right? You focus on what you fear. Like one position will be starting to take a lot of heat, like maybe we're seeing today. One position will take a lot of heat, and that's all that you can focus on, to the exclusion of everything else that's offering opportunity to you out there. So there's other trades that you can take, which are going in the direction that the market is, but you're focusing on the loss. What you focus on expands. So you got to retrain your brain. Your subconscious brain is your core processor of your most basic decisions. It's there to help protect you. This is what we call the lizard brain. It's this lizard inner voice who thinks that risk is bad. But you can't just jack something in the back of your head like the Matrix, right, and just reprogram it. You have to show it the way by doing the work and internalizing your one strategy through iteration. Prove it that your trading is not harmful to it. This is what you have to do, and you alone are the only person that can do this. Okay, I think that was step 6. Yeah, that was step 6. Now we get to step 7. This is the last one here. Now we got to build the right habits. Success is not a step function where you wake up one day and start trading profitably. It's a progression, as we've gone through. Progress occurs through the aggregation of marginal gains. So goals versus system. So a lot of people write out goals and we put out goals and everything like that, but you don't rise to the level of your goals. You fall to the level of your systems. Goals are for those that want to win once. Systems are for those that want to win repeatedly. Or Scott Adams said it more succinctly, goals are for losers, systems are for winners. Your trading needs to be system related. Even if it's discretionary, you need to be able to crank the wheel on it so that you're doing the same thing every day or you're improving every single day. Decide the type of person or role that you want to be. Prove it to yourself with small wins. Every habit that you take is a vote for the type of person that you want to be. This is a quote from James Clear. If you want to be a profitable trader, what would a profitable trader do? How would they act? What habits would they display? And this is always one thing that kind of blew me away. Like, if I were to challenge you to say, like, could you get 1% better at your strategy between today and tomorrow? Most people would say, yeah, I can do 1%. And so you come back the next day and you're 1% better. And then I would say, okay, let's do it again. You want me to get 1% better again today? Yep, do it again. And then do it again and again and again and again. And this is the aggregation of marginal gains. Becoming a profitable trader is not something that happens in one day. It happens through aggregation of small, incremental changes to your actions and thoughts over time. The human mind craves steady progress, and even small wins count to keep you motivated. So for example, if you got 1% better every single day, if you started out with 1, you'd be on a 1 on a scale of 1 to whatever, you'd be at 37 by the time you got 1 year into this. Incredible. That's the power of small gains. And that's a couple of books here that you can look at are Atomic Habits through James Clear. I was lucky enough to meet this guy about 3 years ago. And then Scott Adams, how to fail at almost everything and still win big. Okay, so that's our 7 steps. Let me summarize here real quick. Performance improvement is really about taking one step at a time. So step 1, think differently about risk. Learn to risk use as a tool and not something to fear. Step 2, don't be a jack of all trades and a master of none. Accelerate your progress by defining and then focusing on your one thing, whatever that is. Step 3, just because you set up a trade based on a statistical or technical setup does not mean you necessarily have a trading edge. Define what your edge is against the current character and action of your chosen market. Step 4, creating a business plan will send an important message to your subconscious mind that you are taking this seriously and you deserve to win. From there, create a trading plan for every strategy that you put into play in the market. Step 5. And you can do these all at once, by the way, but if there's some of these that you need more help in than others, then get to those. Iterate and improve. Treat your trading like an athletic pursuit. Repetition is the mother of skill. Keep repeating something until it's second nature and you've iterated the errors away. Step 6. Profitable traders not working against their subconscious mind, which knows if the work has been done. They expect to win because they've done the work. Trading is just a simple process to them. It's not an emotional process. Confidence comes with it, iteration and deep work. And then finally, step 7, build the right habits. Goals are nothing more than wishes if they're not reinforced with the correct habits. Look to create a system for everything that you care about, setting up for long-term success. Okay, and that's your 7 steps, guys. So next steps here. Where do you go from here? For those of you that are not part of our programs or don't have any real connection to us on a day-to-day basis, some of you in the room do, but some of you that are going to watch us down the road do not. So if you need help through some of those, if you recognized yourself in any of the things that I've talked about in the 7 steps today, we've all been there before, right? We're all human. We've all gone through the same. There's one very narrow path to success in the world of trading. We've been there before. We know where it is, and we can help accelerate your progress so you don't have to figure this out from scratch on your own. So you can start by subscribing to our channel for more trader-friendly content. We have plans to put out quite a bit of stuff in the near future on a constant basis. And also, if you're curious, you can see the info below this video for a free trial of the daily Target 100 service, which is the one that I run on a daily basis. Okay, that's all we have for today. For those of you that are live, I'll take questions at this point. Otherwise, if you are watching this on a replay, again, if you want to reach out to me, reach me at doc@12minutetrading.com. Okay, any questions from our live folks that are out there? I realize there's a little bit of a delay. And if there's no questions, we won't keep you. We'll send you off on your weekend. So we're about to go off on a long Labor Day weekend, and this should be good. Good to get away from this market. This has been an interesting market for the past week. This is what happens from time to time. All right, guys. Looks like we're done. So thanks everybody for showing up, and thank you for watching this on the replay on our YouTube channel, and let us know how we can help. Again, my name is Doc Severson, signing off for 12 Minute Trading. Thanks, everybody. You guys take care.